welcome to the deep dive. You're looking to understand what's happening in the Indian mutual fund industry,
Yes.
especially with HDFC Asset Management Company.
Uh-huh.
We've dug into the reports, earnings calls, and articles that you sent our way to get a handle on things.
Yeah, it's a really fascinating time for this sector.
So let's start with the big picture. The industry, the Indian mutual fund industry, it's booming, right?
Absolutely. It's seen like a staggering 32% growth year over year.
Wow.
Total assets under management have climbed to a whopping 66.9 trillion Indian rupees.
That's incredible.
Yeah.
What's driving all this growth?
Well, a lot of it is coming from inflows, record-breaking inflows into equity-oriented funds.
Okay.
We're talking 5,420 billion Indian rupees just in the last calendar year.
So in this really exciting landscape, where does HDFC AMC stand?
They're holding their own, yeah, with a quarterly average AUM of 7.9 trillion.
Okay.
That translates to a respectable market share of about 11.5%.
Right.
But here's where things get interesting. They're holding a larger proportion of equity-oriented funds compared to the industry average.
So they're going against the grain a little bit.
A little bit, yeah.
Is it paying off for them?
Well, if we look at the surge in equity fund inflows that we just talked about,
Right.
it seems like they're strategically positioned.
They're in the right spot.
Yeah, in the right spot. But a heavier focus on equities, of course, comes with higher risk.
Sure.
So how they manage that risk will be key to their success.
Okay, so it seems like they're taking calculated risks to capitalize on growth opportunities.
Exactly. And this approach seems to be attracting individual investors, too.
Okay.
HDFC AMC's live accounts have jumped to 22 million.
Wow.
A 49% increase year over year.
Okay.
And their unique investor count is up 45% to 12.6 million.
So they're not just attracting more money, they're attracting more people.
More people, exactly.
But are they only focused on the big cities? Or are they reaching a broader audience?
That's what I find so interesting about their strategy. They've been deliberately expanding their reach beyond the major metros,
Okay.
opening 25 new offices, primarily in these so-called B30 cities.
B30 cities, so they're going after investors that might be overlooked by the others.
Precisely. And it's paying off. They've already achieved a 12% market share of monthly average AUM in those B30 cities.
That's a smart move.
Yeah.
It's like they're playing the long game,
Yeah,
building relationships with a whole new generation of investors.
absolutely. Now let's shift gears a little bit and look at their financial health.
Right.
On the surface, things look really, really fantastic.
Okay.
Revenue has climbed 39% year over year, and operating profit has surged a whopping 51%.
Those are some seriously strong numbers.
Yeah.
Are there any red flags we should be aware of, though?
Well, while those numbers are impressive, it's essential to look beyond the headlines, right?
Okay.
Their operating margin for the quarter was a healthy 37 basis points. But that could be misleading.
Oh, okay. I'm listening. Why is that a problem?
Well, it's likely inflated by the recent surge in AUM that's driven by, those market gains we talked about.
Right.
And that kind of growth, it isn't always sustainable.
Right.
So while they're doing really well, now we need to see if they can maintain this level of profitability over the long term.
So don't get too excited by a single quarter's performance.
Exactly.
It's all about the long game.
Precisely. Speaking of long-term strategies, let's dive into systematic investment plans, or SIPs.
Yeah, SIPs seem to be really popular these days.
Very popular.
But I've also heard some concerns about increasing closure rates. Should we be worried?
That's where things get a bit tricky. Looking only at net SIP figures can create a distorted picture.
Okay.
Sometimes a closure doesn't mean an investor is abandoning their plan entirely.
I'm a little confused. What do you mean?
Imagine someone who's diligently contributed to their SIP for years,
Okay.
building up a significant sum. Now they need, a chunk of money for a sudden expense, so they might withdraw a portion,
Okay.
which would technically close that SIP,
Uh-huh.
even though they're still committed to investing regularly.
So it's more about adjusting their strategy than abandoning it.
Exactly. Focusing on gross SIP flows gives us a clear understanding of the overall trend and investor sentiment.
That makes sense. So I'm starting to understand the nuances behind all these numbers.
Good.
Now, HDFC AMC's managing director and CEO, Navneet Munot, actually used this very example during their earnings call.
Yes, he did.
He stressed the importance of looking at gross SIP flows, which remain incredibly strong.
Very strong.
So despite some fluctuations, the overall growth in SIP still paints a positive picture for the industry.
It does, absolutely. It shows continued confidence in mutual funds as a long-term investment tool.
Okay, so we've covered a lot of ground here. Industry growth, HDFC, AMC's performance, their strategic expansion, and the nuances of all this SIP data. Where do we go from here?
Well, let's dig deeper into HDFC AMC's strategic focus,
Yeah, but
especially their intriguing plans for leveraging technology and partnerships.
I'm all ears. This is where things start to get really interesting.
You bet. We'll unpack all that and explore the potential of their synergy with HDFC Bank. Now, that's a story you won't want to miss.
Yeah, sounds good.
Okay.
So we left off talking about HDFC AMC's strategic focus.
Uh-huh.
It sounds like they're not just riding the wave, they're actively trying to shape their own future.
You've hit the nail on the head. They're
Yeah.
making some very deliberate moves.
Okay.
For instance, they're really pushing for growth through direct channels
Okay.
and forming partnerships with all these fintech companies.
So it makes a lot of sense. Everything's going digital these days, even investing.
Exactly. It's all about adapting to how investors want to engage with their finances these days.
Right. Right.
And they're not just following current trends either. They're looking ahead, too.
Oh, wait, I mean,
They're eagerly anticipating regulatory clarity on new SEBI-approved mutual fund categories. It suggests they're ready to innovate and launch products that align with future demand.
so they're not just playing catch up. They're trying to anticipate where the market's going
Exactly.
and be ready for it.
Yeah.
Okay. And then there's the elephant in the room, the potential synergy with HDFC Bank.
Right.
Let's talk about it. We touched on it a little bit earlier, but I'm curious to hear more. What kind of opportunity are we talking about here?
We're talking about a potential gold mine.
Okay.
HDFC Bank has over 100 million customers.
Wow. 100 million.
100 million. But only a small fraction currently invest in mutual funds.
So they have this massive built-in audience just waiting to be tapped.
Exactly. If they can successfully educate those customers about the benefits of mutual fund investing, the growth potential is enormous.
It sounds almost too good to be true, but surely there must be challenges
Of course.
in trying to realize this synergy.
Mhm.
What are some of those?
Well, for one thing, not everyone is comfortable with mutual funds.
Right.
Some people might see them as too complex or too risky.
Okay. Yeah, I can see that.
So it's not as simple as just telling people about mutual funds
Right.
and expecting them to jump on board.
It's more about education,
Exactly. It's about education, building trust.
building relationships.
Yeah.
It's a long-term strategy.
Absolutely. And it's not just about educating potential investors. It's also about offering the right products to meet their needs and risk profiles.
So a one-size-fits-all approach won't work.
Yeah.
They'll need to offer a variety of options to cater to different investment goals.
Yes.
And levels of risk tolerance.
Precisely. They'll need a diverse product portfolio, spanning both actively managed funds and passive index funds.
It sounds like they have their work cut out for them.
They do.
But the potential rewards seem worth the effort.
I think so too. Successfully leveraging this synergy with HDFC Bank could fundamentally change their growth trajectory.
Okay, so we've talked about the HDFC Bank opportunity.
Mm-hmm.
But I'm curious about other strategic initiatives.
Yeah.
What else did they highlight in the earnings call?
One thing that stood out to me was their emphasis on direct channels
Okay.
and fintech partnerships.
We talked about that a bit, but I'd love to dig deeper. What kind of partnerships are they looking at, and how will that affect their reach?
Well, they're exploring partnerships with various fintech platforms
Okay.
to expand their distribution network and reach a wider audience, particularly millennials and tech-savvy investors.
So they're trying to meet investors where they are these days.
Exactly.
On their phone, on their computers.
Uh-huh. They're also working on enhancing their own digital platform
Sure.
to make investing more user-friendly and accessible.
So they're really embracing technology, it sounds like. But what about new products?
Yeah.
Are they developing anything exciting?
Well, they're eagerly awaiting clarity on those new SEBI-approved mutual fund categories we mentioned earlier.
Oh, right. Can you remind me what those new categories are all about?
Sure. Essentially, SEBI, the regulatory body, is looking to introduce new categories like ESG funds and debt funds with specific maturity profiles.
Ah, okay. And how will this affect HDFC AMC?
Well, they see it as a significant opportunity to cater to evolving investor needs.
Okay.
For instance, ESG funds, which focus on environmental, social, and governance factors,
Oh,
are
yeah.
becoming increasingly popular among investors who want their investments to align with their values.
It's not just about financial returns anymore.
Right.
Investors are looking for companies that are doing good in the world.
That's right, and HDFC AMC wants to be at the forefront of that trend.
Mm.
They're also planning to expand their offerings in the passive investing space,
Okay.
specifically ETFs or exchange-traded funds.
I've heard a lot about ETFs. Can you explain what they are and why HDFC AMC is interested in them?
Sure, ETFs are essentially baskets of securities that track a specific index,
Okay.
like the Nifty 50.
Uh-huh.
They offer investors a low-cost and transparent way to gain exposure to a particular market or sector.
So it's like buying a tiny slice of the entire market.
Exactly, and they've become increasingly popular, especially among younger investors.
Okay.
HDFC AMC sees this as a growth area and plans to launch new ETFs in various categories.
Okay, so they're covering a lot of ground here.
Yes.
Technology partnerships, new product categories, expanding their EPF offerings. It sounds like they're leaving no stone unturned.
They're definitely taking a proactive approach.
Yeah.
But remember, all of this is happening within a dynamic
Right.
and sometimes volatile market.
Right. So even with the best strategies in place,
Yes.
they still face challenges and uncertainties.
Right.
What are some of the key risks they're navigating?
Well, one of the biggest challenges is managing risk in the face of potential market volatility.
Okay.
Equity markets can be unpredictable, and any downturn could impact their AUM and profitability.
So even though they're leaning into equities, they need to be prepared for the possibility that the market won't always go their way.
Exactly. They also need to keep a close eye on competition. The Indian mutual fund industry is getting increasingly crowded with new players entering the market all the time.
So they can't afford to get complacent.
No, they can't.
They need to stay ahead of the curve and keep innovating to attract and retain investors.
Absolutely. And another challenge they face is regulatory uncertainty.
We've talked about the new SEBI-approved categories, but what other regulatory changes could impact them?
Well, there's ongoing debate about the total expense ratio,
Okay.
or T, which is the fee investors pay to mutual fund companies.
Okay, I've heard of tier, but I'm a little fuzzy on the details. Can you explain it?
Sure. T is essentially the cost of managing a mutual fund. It covers things like administrative expenses, fund management fees, and distribution costs.
So it's like a management fee that investors pay for
Exactly.
the convenience and expertise of having their money managed by professionals.
And there have been discussions about potentially changing the tier structure,
Okay.
which could impact HDFC AMC's profitability.
So regulatory changes around fees are something they need to be prepared for. What else should we be watching for?
Well, there's also the broader economic environment to consider.
Okay.
Factors like inflation, interest rates, and government policies
Right.
can all impact investor sentiment and market performance.
So it's not just about what HDFC AMC does, it's about the bigger picture as well.
Exactly. They need to be agile and adapt to a constantly changing landscape.
Right, and that's what makes this industry so fascinating.
It is.
There's always something new happening.
Always.
Well, I have to say, this deep dive has given me a much clearer understanding of the Indian mutual fund landscape
Good.
and HDFC AMC's place within it.
Glad to hear it.
We've covered a lot of ground from their strategic initiatives and growth opportunities
Yeah.
to the challenges they face.
Uh-huh.
And we even explored some of the nuances of SESIP data
Yeah.
and the potential impact of regulatory change.
Yes.
Is there anything else from the earnings call that we should touch on before we wrap up?
Yeah.
Now that you mention it, there was a bit in the earnings call about thematic funds that caught my attention.
Mm-hmm.
I've been hearing a lot about those lately.
Yeah.
Seems like everyone's trying to jump on the next hot trend.
Yeah, thematic funds have definitely been gaining popularity. They focus on specific investment themes or trends like AI, renewable energy, electric vehicles.
It's like trying to pick the winning horse in a race.
Kinda, yeah.
But how is HDFC AMC approaching this trend? Are they diving headfirst into these thematic funds?
Actually, they've historically been quite cautious with thematic funds.
Really?
Yeah, they believe in a balanced and diversified approach to investing
Okay.
and caution against chasing short-term trends.
So it's about taking a long-term view and not getting swept up in the hype.
Exactly. Their philosophy is that a well-diversified portfolio,
Right.
strategically allocated across different asset classes and investment styles,
Uh-huh.
is the key to sustainable long-term growth.
So they're not completely dismissing thematic funds,
No, no.
but they're approaching them with a healthy dose of skepticism.
Precisely. They do offer a range of thematic and sector-specific funds for investors who are seeking exposure to those areas,
Okay.
but they're careful about managing risk.
How so?
Well, for instance, they capped SIP contributions to their defense fund to prevent investors from over-allocating to a single theme.
That's a responsible move.
Yeah,
It shows they're prioritizing investor interests and not just chasing profits.
absolutely. Now, another interesting point that came up in the earnings call was the discussion around potential regulatory changes regarding the total expense ratio.
Tier.
Right.
We touched on it a little bit earlier.
Yeah,
That's the fee investors pay for having their money managed, right?
that's correct. And there's been growing debate about whether the current tier structure fairly reflects the benefits of scale as the industry grows and assets under management expand.
So as mutual fund companies manage larger and larger pools of money, shouldn't their costs become more efficient, leading to lower fees for investors?
That's the argument some people are making.
Okay.
There have been proposals to switch from a scheme-based TER structure
Right.
to a fund-based one.
Okay.
This means the TER would be based on the total AUM of a particular fund rather than individual schemes within that fund.
It sounds like they're trying to find a more equitable way to distribute those benefits of scale among investors.
Exactly.
What's HDFC AMC's stance on this?
Well, they believe the current TER structure, with its telescoping pricing mechanism, already effectively passes on those benefits.
Telescoping pricing, can you remind me how that works?
Sure. Essentially, as the AUM of a fund grows, the tier automatically decreases. So
Okay.
investors in larger funds automatically benefit from lower fees.
It's like a built-in discount for investing in larger, more established funds.
Exactly. And HDFC AMC argues that this mechanism is working well and that further regulatory intervention is unnecessary. Okay.
But of course, the regulatory landscape is constantly evolving, so it'll be interesting to see how this plays out.
All right, so we've covered a lot of ground in this deep dive.
We have.
We've explored HDFC AMC's performance, their strategic initiatives, the challenges they face, and even delved into the nuances of industry trends and regulations.
And we examined their approach to risk management, their commitment to investor education, and their focus on adapting to the evolving digital landscape.
It's been a fascinating journey.
It has.
And as we wrap up, I'd like to leave you with one final thought. As the regulatory landscape continues to evolve, particularly with these new SEBI-approved mutual fund categories, how will HDFC AMC adapt and innovate to capitalize on these changes and meet the evolving needs of investors?
That's a great question.
And with that, I think we've reached the end of our deep dive.
Okay.
I hope you found this exploration of the Indian mutual fund landscape and HDFC AMC as insightful and engaging as I have.
Me too.
Until next time, keep diving.